Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today. April 12th, CPI came mostly as expected. Inflation rate year over year came 5% of 6%. 5.2 was the consensus. I will explain the difference between 5 and 6 because I think a lot of people are saying, oh, this is good, but wait, hold on. We are going to review the report in details. Inflation rate month over month, slightly lower, 0.1, still increasing of 0.4. The consensus was 0.2. And pay attention to this core inflation rate year over year, as expected, 5.6 and higher than the previous one. And core inflation rate month over month, as expected, 0.4, slightly lower than the previous one. So overall, this might look like good news, but well, let's pay attention to the details. If you check here, this is energy, minus 3.5 overall for energy, commodities minus 4.6, energy services minus 2.3, fuel minus 4. So this is all good, right? Utility piped gas minus 7. Wow. But take a closer look to this. All items less food and energy, this is the core CPI, still 0.4% month over month. And the feds are closely watching services, core services, shelter and transportation, and both came still higher. Still a lot of work to do. That is what Fed's Barkin is right now saying. He's saying today's CPI report was pretty much as expected, but he particularly focused on core inflation, and there's still a lot more to do there. He definitely sees a reduction in demand, but he says that we have certainly passed peak inflation, but there's still some way to go. In terms of rate path, I believe we react to inflation as it occurs. So they are waiting still for new data. And his opinion regarding credit card spending is that in March gives some relief that demand is cooling. So the credit card crisis due to banks crisis is certainly putting a lot of pressure on the households and on demand. So demand is cooling. He also says that he wants to get inflation back to target, but we need several months of it approaching 2%. He doesn't want to declare victory too soon, obviously. And he's finally saying, I'm not hearing much change in bank lending right now. So if we check, let me go back and check the PDF, because the PDF has some interesting things. If we see the red dot line, this is the core inflation, and the blue line is the general inflation. So we basically look at this. You remember last year, March, April, May, and June were outstandingly high. So we are now entering this period in which we are taking out March, April, and those months out of last year to do the calculation for this year over year. So basically, we are taking out these big numbers and seeing a decrease from 6% to 5% year over year. That's all good, right? Wait, not too fast. We have to focus on core inflation. That's the sticky part of inflation. And most probably, well, the Fed said already that they are focusing on shelter, transportation, and overall core CPI and core inflation on the services sector. So energy was nice to have lower CPI, but still, overall, I don't think this is just as expected. This is putting a lot of concerns regarding the pace, and if we are actually seeing inflation going down or just the calculation between year over year. So regarding what drove, so Obviously, more details. Housing was a notable inflation driver in March, and over the past year, according to the rollover statistics, and the shelter index increased 8.2% in the last year. And this accounts for over 60%. That's why the Fed are focusing on that. And more practical cases, these are data, facts. Eggs still 36%, margarine 33% year over year. I mean, there's a lot of pressure on prices. So there's no way we are just claiming victory on the fight with inflation. There's no way. Gasoline, okay, minus 80%, energy overall, minus 6%, but still, look at all these numbers. So this is, I think the expectations were more or less met, but I think traders and investors are looking for more, because if not, Fed will continue raising interest rates hikes. And remember that markets are pricing in 25 basis points in May, and also they are pricing in 2 interest rate cuts this year. Those that the Feds are not planning to do. They said that. So initially, remember, the initial reaction is just a liquidity grab. They pushed, we reached like 200 points or more, and we just continue going lower and lower and lower. And right at the open, we rejected heavily. We found support at previous bottom of 830, but look at this. This is obvious trend line. A lot of people is watching this. I'm not the only one. This is not just a casual rejection. This is just what's the overall sentiment doing. So we are just rejecting. It is what it is. I would like to be long in this market, but there's no way on the technical side, there's no way you can see this price action with point of controls way out, way up there, a lot of volume up there, short in the market. There's no way you can just say, I'm going to go long. Not yet. I think the only thing that bulls have right now is this area of support. But let me tell you, once this breaks, you don't want to hold on those longs, because right below there's a lot of, this is the 30-minute chart, by the way, right below there's a lot of potential, at least 47 points, 2.36%, to find the really big kahuna support with these two demand zones. And if we broke down at these levels, I don't think shorts are going to be covering too much. There's a lot of potential to the downside if we really want to go bearish. On these two big support zones to the downside, there's a lot of potential down. So be careful today. I would like to take some longs. This is holding, but I'm not yet convinced. I don't see volume, big players really betting again to go higher. I don't think this is happening. The 30-minute chart says a lot of rejection, a lot of red. So we are not convinced, right? I'm not talking about traps. I'm not talking about not basing our decision on facts. We got the facts, the data, and the sentiment it's mostly bearish. So if you don't want to take shorts, just wait. And right now, my best advice is for you to just sit tight and wait for the price action to show you when the markets are ready. If this is accumulation, we will see it later. We will just break out. Let's take a look to other markets to try to find some details regarding what most probably is going to happen or how's the overall sentiment. Dollar is super weak. Yields are in the red. The 2-year, the 10-year, and interest rates futures for this December and September are still there, holding. So we spiked up, we spiked down, and we are just, look at this. This is a doji, indecision, equilibrium. So there's no way we can just try to take positions in advance. You have to wait and see reactions to key levels. And right now, my only key level to take some longs is just this level. This is the last support. We'll see what happens. Right now, you can see we got a point of control flip down here. So volume is accumulating at this 13,068, the famous level that I'm watching for all this consolidation that we are not breaking down. If this holds, right, good. We are good to go. But I'm not betting yet. I need more sentiment. I don't think this is a chart in which you can see longs. So we'll just have to wait. Crude oil spiking up 1.61%. And look at this. In the last 23 days, crude oil is just 28% since lows. And this was accumulation. Look at these 2 days. Volume is coming in slowly. We're approaching 83. This level is super key. If we close above 83, well, most probably we are going to see 87 or 89, even 90. And that would cause a lot of pain in the prices on the pumps. So watch out for crude oil, because as you can see on today's report, energy is part of the reason why we met expectations, because that was really down. Energy was really down March. Look at this. Remember this drop? So what will happen when in April we got CPI? Well, let me tell you, this is not going to do any good. This move is not going to do any good for CPI and inflation. And I think smart traders, smart investors are really seeing that, because this kind of move, unexperienced traders will say this is just accumulation, this is just a trap, but fundamentals are not strong enough to justify a really big move. That's why we reject it. Overall sentiment is just not there to the long side. I would like to also share, okay, remember that this Friday we have banks earnings. JP Morgan, look at this chart. It's not good, right? Wells Fargo, not good. Goldman Sachs, selling off. And overall, regional banks, FRC, Credit Suisse, I mean, this is not US, but FRC, a lot of banks are in the red since the open. Be careful, because we have also to price in not only inflation, but also the banks earnings starting this Friday. Be careful with valuations. If valuation is not there, market will drop to find any good value on that. And if we don't hold this, there's a lot of potential to the downside into maybe some bad earnings on banks. So be smart, wait for those opportunities, because there's plenty of day for trading still. Look at this rejection. Not any good. There's plenty of hours today still to trade. Most importantly, there's plenty of days in the week. FOMC minutes today at 2 p.m. That would provide maybe some details, but I think the big one is already out. On Thursday, PPI, more data on inflation. Initial jobless claims and continuing jobless claims, more data on labor market, more fundamentals. And on Friday, retail sales. And remember that, let me show you on the chart, JP Morgan, if we check the 30-minute chart, this is the earnings. This is before market open. Wells Fargo. Check. Okay, here it is. This is before market open. Goldman Sachs. This is on Tuesday. Is not good. Is Goldman Sachs is not. Maybe this is wrong. I think it's also this Friday 14th. But anyway, before market open, a lot of banks will provide earnings before market open. And also we have retail sales. So there's a lot of opportunities this week, not only today for CPI. We have plenty of opportunities. Just don't get caught in a bad position. This is not looking good. And we are approaching this support again with lower highs. You can see that, right? So just be patient and react to those levels. If you want to take a short here, I mean, you have your technical setup. If you want to take longs, in my opinion, there's still a lot of work to do, at least until this level. There will be shorts here willing to add for sure. And there will be shorts for sure at these levels willing to add. So, okay. Look at this. We are approaching there. So, as you can see, there's a lot of weakness in the market. So just be smart. Be the trader that don't fall into FOMO and just in the long term finds the process. Look at this. Finds the good process and finds that discipline and risk management that every successful trader needs. So that's my advice for this week and for all your trading career. This was the setup, and I think a lot of people is watching. I think that's all from my side. I hope you found this video useful. And if you found this video useful, please give it a like and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. We are seeing a lot of weakness across the board. If you are short, I think those that are counter trading are finding a lot of success. I think today's CPI was lackluster. Let's see what happens. There's a lot of days still ahead, so just be patient and remember that discipline and risk management are key for success. Stay safe, everyone, and be careful.